Hello all and welcome back. I hope you're all doing really well. This is going to be another quickfire update video. First thing I wanted to cover is a couple of tweets that have been pushed out by Blockworks. This is from a Jpmorgan report that's been summarized, and they're comparing Bitcoin versus gold, and they have basically found that Bitcoin beats gold in scarcity, durability, portability, fungibility, divisibility, verification, and censorship resistance. This is obviously fantastic because it's the wider adoption and institutionalized aspect of money flowing into the cryptocurrency markets rather than potentially precious metals as we've seen previously. And it also adds a little bit more validity to the cryptocurrency market when you've got big players and big banks like Jpmorgan, who have a huge amount of wealth under management or assets under management, are speaking quite highly of Bitcoin in comparison to gold. Also, another tweet by Blockworks talking about how South Korea's largest mobile gaming company has made Metaverse a staple plan. So Netmarble said it will develop its first Metaverse game following the establishment of a development arm in August. So this is something we're seeing as a general trend for companies across the globe, and that is they are setting up sort of mobile payment, a digital payment, a digital asset foundries within their business. For example, check out my previous videos on Google, where Google have been setting up digital asset arms of their company, because they know that this is the future. Whether it be 5 years or 10 years down the line, this space will grow rapidly and amass a huge amount of wealth and assets in the space. If we move on to this is something I tweeted out earlier today, so it's based on some information that was posted over on the Hedera subreddit, but I basically put together a chart looking at the real transaction speed, so i.e. actually processing a transaction, not theoretical, in seconds of these 4 different chains. So Hedera being done via the use of Hashpack wallet, Avalanche, Fantom and Polygon being via MetaMask. And what we can see across the board is in these 3 different transactions, every single time Hedera is a substantial margin ahead of the competition. So on average 6 seconds for a transaction on Hedera to send some funds, Avalanche being 13, Fantom at 23 on average, and Polygon at 28. What we can also see as well is if we compare the speed differential between the networks, with Hedera being a baseline, is that Hedera is nearly 1.2 times faster than Avalanche, it's 2.8 times faster than Fantom, and it's nearly 3.6 times faster than Polygon. Again, this just shows how powerful that Hashgraph technology is instead of a traditional blockchain system. Not to mention, it's cheaper, it's greener, and it's more secure with ABFT. So I thought a nice little graph, and just sort of shows the power of what we're really utilising and why this will probably become the institutional standard, as well as usage in governments, etc. It's rapid and it's very, very secure. Another thing as well I wanted to touch on just was the open sourcing of Hedera. Again, there's a previous video on my channel where I go into a lot of depth, but there's quite a nice summary of tweets here that were published by 𝗟𝗜𝗙𝗘𝗥𝗥. The likely consequences that all future networks will be hash graphs instead of blockchain effectively. This move renders blockchains obsolete. Why? Developers are now free to choose between blockchain and hashgraph technology for their networks, and as the community has understood for some time, hashgraphs are far superior to blockchains in performance, speed, scalability and security. Like I've just said, we've seen that in the previous graph. They definitely are. Not to mention as well, Hedera being in its infancy with the hashgraph, and they have the potential to shard to increase the TPS, whereas other blockchains are already having to use sharding, for example Ethereum, to keep up with demand. That's not even the case yet in terms of Hedera. We see down here as well, as a consequence, although there will be undoubtedly demand for alternative hash graphs for specific applications, they won't be necessary critical infrastructure as in the case of Ethereum. Interoperability is critical. Future private hash graphs will interoperate easily with the Hedera network. This is the founder's vision, and as Swelds controls 10% of Hbar supply, it's in their financial interest. Again, this is what we've mentioned before. It's that Hedera has been built to scale. It wasn't sort of thrown together and pushed out immediately to sort of jump on some sort of fad, and that's why it's kind of been suppressed for the last sort of 2 years of its existence, and that's why we're starting to see the social momentum spike rapidly, is as people begin to understand what this is about and why it's so different. This isn't just Ethereum 3.0 or the next spin-off of Bitcoin or Litecoin or something stupid. It is something truly unique with before patented technology. The technology was so new and novel that it had patents against it. This is kind of the power that we're looking at here. Anyway, guys, I hope you enjoyed this sort of quick video again. So the real takeaway is that Hashgraph is fast, and it's much faster than a lot of the other competition out there, and that's without even looking at the rest of the benefits of the network. Anyway, guys, leave a like if you liked it, subscribe if you want to see more future content like this, and drop a comment if you've got something to say. Take care all.